Investors are losing thousands of dollars, and it's not because they don't know how to invest. It's because they're trying to fit a square peg into a round hole. That square peg, it's the stocks you're buying and the reasons behind them. The round hole, it's your investing style, and it's all wrong for your stocks. That's why I want to explain the 3 investing styles: day trading, swing trading, and long-term investing, along with the fact that most investors think they're long-term investing, but are really swing trading, and how it's losing your money. Now, this is not going to be your typical trading is bad, long-term investing is good lecture. I get it. There is an itch to be scratched chasing those higher returns, so I'm here to give you the facts, a little humor, and maybe even save your sanity along the way. I'll detail the pros and cons of each strategy, how to do it right, as well as real-world examples of successful investors in each. Stick around and I'll reveal a hybrid strategy I'm using with my portfolio to get the best from each. Let's start with day trading, the X Games of investing. Day traders are like the adrenaline junkies of the finance world. If these guys weren't investing, they'd probably be mainlining crack and base jumping the Empire State Building. The goal in day trading sounds simple. Buy a stock in the morning, sell it as soon as possible within that day, and make a quick profit. Sounds easy, right? You just have to be right about which direction the stock is going to move through the day. Now, day trading is a completely different animal from the other 2 strategies because instead of focusing on fundamentals or value of a stock, economic events, or other factors that can move that stock price, you're focused completely on charts of the stock's price. This is called technical analysis, looking for those patterns in the price of a chart that are going to replay over and over. Patterns you can jump in to buy or sell a stock and profit from those predictable changes. We don't talk about day trading here on the channel much because this one takes commitment like a badger. I mean, you're going to be staring at candlestick charts so long that you're going to start hallucinating sailboats moving around. But do it right, and this can be a profitable strategy. I teamed up with day trader Thomas Carvo to launch our technical analysis course, sharing not just the fundamental analysis I do on this channel, but the technical analysis for traders on his. Thomas shares his daily trades, and while it's not the millions you see promised on other channels, it is profitable. I'll highlight the pros and cons of day trading along with some tips on the strategy later, but if you want to get started, I'll link to our complete technical analysis course in the description below. You'll get over 30 videos on how professional investors trade stocks, along with bonus material on fundamental analysis, trade examples, and trading worksheets to follow your trades. Click through the link for a special coupon to save $150 and try it free for 14 days. While you've probably heard of day trading and long-term investing, swing trading is like the weird brother your parents have locked up in the basement. What, just me? Anyway, just like him, swing trading isn't bad, just misunderstood. Swing trading means holding a stock for a few days to weeks and sometimes out a few months, but not something you're planning on keeping to retirement. Swing traders are trying to profit from those short-term trends, riding the momentum in a stock, or just taking advantage of something the market hasn't seen yet. And right now, some of you should be looking like you finally understand the plot to the Matrix, because a lot of long-term investors out there are actually swing traders without even knowing it. I know this because data from the New York Stock Exchange shows the average holding period for investors has fallen from holding a stock as long as 8 years back in the 60s to less than 5 months today. Investors are selling their stocks within half a year of buying them, meaning they're either consciously practicing swing trading or Bruno has escaped from the basement and has hacked your account. Now, before you do check the lock on the basement stairs, just like with day trading, there's nothing wrong with swing trading as long as 1, you realize that's the strategy you're using, and 2, you know how to do it right. For example, Paul Tudor Jones could be one of the greatest traders of all time. Known for swing trading commodities and the stock market, this guy prints more money than the US Treasury. While other brokers were jumping out the windows, Jones made over $100 million on Black Monday in 1987, as well as positioning in Bitcoin just before the 2021 spike on inflation. I mean, this guy's weekend home went for $30 million. So yeah, swing trading works, but you're looking for a different set of measures and factors in stocks than you are with long-term investing. Let me explain that long-term investing strategy, and then we'll look at how they differ and what we're looking for in each of those strategies. But then, as potentially profitable as the other 2 may be, long-term investing has the best track record for making people rich. It's not flashy, and it's certainly not going to give you that adrenaline rush of making 10% a day in shares of Nvidia, but you know what it does give you? Peace of mind and a good night's sleep. Long-term investing is about finding quality companies, buying the stock, and basically forgetting your password for the next 10 years. It's Warren Buffett's bread and butter, stocks like Coca-Cola, Apple, and American Express. Buffett has recently started trimming his Apple stake, started in 2016, and has made over $76 billion so far. In fact, to give you a little perspective, the NASDAQ 100, the 100 largest non-financial companies traded on the NASDAQ exchange, represented by the QQQ fund, has returned a 14% annually over the last 20 years. That is almost 15 times your money. It would have turned a $500 monthly investment into over $628,000. You would have invested just $120,000 and would now have a nest egg well over $500,000. So no, long-term investing is not going to be exciting. It's a practice in Zen meditation and just letting go and letting those stocks work their magic. But it's the no hassle, no work way that's best for most investors. I'm going to highlight the pros and cons of each strategy next, along with tips on how to make money in each. But one critical tool to both long-term and swing trading is options investing. Investors are loving options investing with nearly 40 million contracts every single day to boost their returns. But most investors are doing it wrong, losing over $5 billion a year. That's why I'm relaunching my Ultimate Options course. Over 3 hours of video. I start with the basics and then walk you through 29 option strategies, when to use them, and how to set it up, including real-world examples with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly what to expect. Right now, I'm relaunching the course at a 38% discount. Save $150 off, but only for the next 3 days. You'll get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. Now that $150 launch discount is only available with the coupon code in the link I'll leave in the description below, so check that out or scan the QR code here. Now, as clear as the evidence is that long-term investing is the best strategy for most investors, there are pros and cons to each style and a way to do each right. Let's start with the pros and cons for each, and then what to look for. Pros of day trading are that it's a quick return. You're in and you're out, and if you're good, you can make some serious cash. In a study of 450,000 day traders, 19%, or about 1 in 5, had abnormal positive returns in any given year. They beat the market, and the top traders were able to consistently make just over 1/3% profit each day. That might not seem like much, but 1/3% compounded over roughly 200 trading days a year would be a 113% annual return, doubling your money each year. Another upside for some is the challenge of beating a market of professional investors and a rush that comes when you do it. Of course, the biggest downside is that very few people are able to trade profitably. That same study found that the bottom 440,000 traders, or about 97% of traders, lost between 1/4 and 1/3% a day. Again, doesn't sound like much, but you're going to see your portfolio cut in half over the year. And most don't realize another con until they start trading: the stress and the hard work that comes with real day trading. Now, folks, we're not talking about buying a few shares of stock while your boss isn't looking in the morning and then setting a sell order for that day. That kind of armchair day trading virtually guarantees you're going to lose money over the long term. No, real day trading means sitting your ass down in front of the charts and your trading platform for hours a day, because if you think you're going to beat those algorithms, the hedge funds, and the professional day traders out there just by getting a couple stock picks off YouTube every day, well, I could just take your money and kick you in the balls, because that's pretty much what's going to happen anyway. One of the pros of swing trading is that it doesn't take that professional commitment. You can swing trade and still have a life outside your stock charts and trading. You've got more time to analyze which stocks you're going to buy and the reasons that can take them higher over weeks or even months. And in my opinion, swing trading is just a lot easier to get right than day trading. With swing trading, you're just looking for those big picture forces that are carrying a group of stocks higher, or just riding the momentum in one stock. We're anticipating major news events or catalysts that are going to pop a stock higher. But swing trading is still risky. Maybe not as risky as day trading, but riskier than long-term investing. You're holding stocks for a short time, which means you're going to be susceptible to those market swings like earnings reports, unexpected bad news, or some asshole billionaire's last night tweet storm. You're also going to see another downside of swing trading come tax time. This is one that most investors don't think about until it's too late. Any profits on stocks you hold for less than a year, so anything you make on your swing trades or day trading is going to be taxed as short-term capital gains. That means it's added to your income and taxed at much higher rates. The table here shows short-term or income tax rates by your income level, and you can see these go up as high as 37%, while long-term tax rates, those rates you pay on profits for stocks held over a year, are just 15% for most people and capped at 20% even for the richy rich out there. And that brings us to one of the upsides of long-term investing, getting that sweet, sweet tax break of just 15% on your profits. In fact, if you make less than about $44,000 a year, then you won't have to pay any taxes on your long-term capital gains. Long-term investing also puts time on your side. Instead of trying to predict where a stock is going to be today or next week, you're just riding it higher year after year. Of course, it's a hell of a lot easier to do as well. You still need to pick those good companies, but you're not constantly having to research and find new stocks to buy. Just find a dozen or two great stocks and buy and hold those. There are downsides to long-term investing though, the biggest of which is it is so boring. Folks, this isn't just watching grass grow. It's watching the grass grow while reading the terms and conditions to your iPhone contract. It is that boring. You need to have the patience to just invest your money, set it on automatic monthly contributions if possible, and just don't even think about it. And here you're also not scratching that itch, that excitement of following the stock market and the hottest trends. Now, it might not be the big reason you're investing your money, but for me, and I know for a lot of you out there, you do get some value, some enjoyment out of following the stock market, swing trading, or even day trading your stocks. That's why I want to share my strategy for doing both, getting the pros of those long-term returns, but also the upside thrill in swing trading later. First though, some tips on what to follow for each style of investing. For day traders, it's all about that technical analysis, following those charts and being able to see the patterns that repeat themselves over and over again. Again, if you're going to do this, you need to commit to doing it right, and a quick list just isn't going to cut it. You need to really learn those patterns, like in our technical analysis course, but here you're looking for things like the Relative Strength Index, the RSI, which is going to measure the trend in a stock price and whether it's overbought or oversold short term. You're also looking for moving averages, which are the price trends in the stock has over 50 or 200 days. You're looking at support and resistance areas in that price chart, where the stock has typically bottomed out before rebounding, and at what price it has typically failed to break through going higher. For swing trading, you can watch those technical signals as well, but for me, a lot of it comes down to those bigger picture market and sector trends. I'll watch how the sectors and the industries are performing for that tailwind that takes all the stocks in the group higher. In our weekly market newsletter, we watch for those major economic reports like the CPI inflation report, the Fed interest rate decisions, and then the monthly jobs report. A lot of swing trading also comes down to analysis in specific stocks as well. For example, it didn't take too long to realize that we were in for a particularly horrible hurricane season. Between trips to Walmart to load up on water, I also loaded up on shares of Generac Holdings, now up 22% in the last 3 weeks. Then for the long-term investors, it's all about buying those solid companies that are going to grow over time. Here you're looking for a lot of the fundamentals we talk about here on the channel, like a market leader in a growth theme and a competitive advantage over its peers. It's going to help it grab more market share. You're looking for a trend of growing revenue, higher operating margins, and healthy earnings growth over time. Now, the good news here is that while it's still going to mean hours of research to find that 10 or 15 stocks you really love, you're only going to have to do it once and then just keep buying those for years. I'm going to show you my strategy, how I get the best of both worlds with swing trading and long-term investing next, but I've also included a few video links in the description that are going to help you out. The first here in the corner highlights the 7 stocks that could become the next magnificent 7 tech darlings, the next trillion-dollar companies that you need to buy for your long-term investing list. The other video, a complete guide to analyzing stocks to help make you a better investor. And here the strategy I use isn't complicated. It's just a way I get those stress-free long-term returns while also getting the enjoyment I get from following the market and an active approach with swing trading. Most of my investing money, about 80%, goes into an account for long-term stocks. Those stocks I want to hold for years and years. But knowing myself, I know that if I only had that one long-term account, that desire to actively follow stocks and trade would just destroy my portfolio. I'd be picking those long-term investments, but then selling the winners too early and probably holding on to the losers too long. So to avoid that short-term trading in my long-term stocks, I set aside the other 20% of my investing money into a swing trading account. Here I get to scratch that itch of following the market, investing in those near-term trends, and profiting off the momentum. It's a small part of my overall wealth, so any losses aren't going to change my long-term goals, and it keeps me away from trading in my long-term stocks. Get your exclusive community discounts to the trading and options course, but only with the coupon code in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.